Hey, what's up, everybody? So, my bad. I was trying to get some stuff done. I was not speaking though, so we're good. So, hey, how's it going? Um, I just wanted to do a quick breakdown. So, some again, I think something happened this week with the Trading Nut podcast. I don't think the episode was or the pre-stream was uploaded right, so um, I wasn't able to do that. So, just want to hop on here really quickly and just do some charting, and just general Q&A sessions for everybody. So if you guys can hear me, drop a one in the chat really quickly. Kind of go from there. So, um, man, again, yeah, everybody in this chat. This is going directly to the mentorship chat or the main TickUps chat. So everybody should obviously know who I am. So I'll spare y'all the introduction. Um, all right, so really what I wanted to do is kind of just look at a few things, right? So I have not looked at any charts since last week. I took a trade. If y'all know by now, I have the $10,000 account that I've been trading in the challenge. So I'm up to $13,000. So in 3 weeks, a 30% return. That's anything way better than anything you're gonna get on Wall Street, right? So um it kind of shows the power of being able to trade your own accounts. So um be looking to hopefully compound that this week. So what I want to do is I'm going to do my normal breakdowns that I do for the Trading Nut podcast, and kind of just start from there. It'll probably be a little more in depth because this is my own channel versus the Trading Nut stuff. So you guys are in a little bit of luck if you're not a mentorship student. So if we look at US dollar, right, that's obviously the first thing that we want to see. Again, we've been in this huge consolidation. So one thing that we want to really understand here, and I called this a few months ago, right? Is that the market really had broken structure here, even though we traded into an old imbalance here, an old BISI down here. Um, the market had really broken structure, and we were consolidating. What I was watching is this higher time frame imbalance, this monthly fair value gap. And I can't remember when I called this. I think this was like very early this year. I said we probably will flow into this at some point and then retrace and start really dropping in the opposite direction. So long term, I called it a bearish dollar, and it just kind of lines up with a lot of the stuff that's going on with obviously inflation and that type of thing too. So we've really been in this consolidation channel, but came up here, lined up, knocked out this fair value gap, and then the secondary imbalance, which is from this low to this high, we came up in here and really retapped it, and we've pretty much been tanking. So that's on a monthly time frame. If we go down to the weekly, it's really going to give us a better understanding, a better look of what we wanted to see. But looking at the long term time frame, we were going to be bearish, right? So um, if we zoom in, obviously last week what we wanted to see was the market really take out. I think this was our initial target here at 101.84, right? And then obviously the main target, which was this target here, we smashed that on dollar. So bearish dollar really inevitably means bullish on everything, indices and euro um, currency pairs. So that's been cool. So for this week, what I want to do is I want to see the market. Best case scenario, I want to see the market really run up, kind of fill this old imbalance here. In long-term lows, I'm looking at these lows. The reason that I'm looking here is because these relative equal lows here. So you have to be very careful whenever the market kind of like stops um, and kind of gives you these things that look like support, right? Oh, it's stopped before taking these lows out. We're just building liquidity, right? And that's the big thing. So um, that's the big thing there. So these relative equal lows, I'm assuming the market's really going to come down and really take these out this week. Ideally, what I would love to see the market do is, and this could happen over the next week, it could happen in a day, but ideally, what I'd like to see the market do is really just give us the lower end of this fair value gap. So ideally, I'd love to see us kind of drive back up into this range, kind of close this week out as giving us the lower end of that fair value gap. And then the next week where we really kind of take things out. If we go to the daily time frame, which is going to be the kind of what we're going to be looking at the most, we might not see that. So I'm really going to be looking at this low here and that gap here for the market to really run into, right? So again, I want to see the market kind of do something like this, where it trades back up into this range. And then, again, first target will be these lows, the low of the week and the low of the last of Friday, which is also the low of last week, to really come back into that range. But let's go to the 4-hour really quickly. Yeah, so we could see ourselves kind of riding back up into this gap a little bit more. Wouldn't be surprised if it happens. We also have to kind of keep take into consideration here that this is the last week of the month, right? And so my students, I talk about this a lot with my students, but the formation of a candlestick, right? If you think about our Friday counter trend setup, right? We know that the week is usually not going to end at the high or the low of the week. It's usually going to have a retracement back into the range. And it's going to be the same thing with these monthly candles, right? So as we're coming up in the end of the month, this week might not be the best highest probability trading or it might be counter trend to what we've gotten for the month, right? So we know that most candles have a wick on them, right? So they're probably inevitably going to close with a wick. So this candle's trading in pretty much its all-time low. It's probably going to trade off of that, right? So I wouldn't be surprised if we ended up with a counter trend week where, Monday we swept the low that we just formed today, and then we traded back up in this range to end the month. So you kind of have to be aware of where you're at in like the daily, the weekly, the monthly cycle of candles as they're painting, as they're forming. So I know a lot of people when they trade, they try not to go above the like certain time frames. Like people will be scalpers or like, oh, I stay on the 15-minute, the 1 minute. I think as a trader, you need to know what's going on in every single time frame. You need to have a better understanding of where price is going on your daily and your weekly, even if you're a scalper, right? So mentally, I'm a swing trader, right? Like I want to know what the big price swings are doing, but I'm more of a lower time frame trader. I'm more of a scalper. I get in and get out in the same day. And my getting in and my getting out is just lined up with what's going on in these higher time frames. So Justin's on here. He said top of the evening. Tony, what's going on? Hugo said 1. Cool. So ideally, man, what I want to see here is the market really just kind of run for these lows or retrace back into the range. This could be, us coming back up here to inevitably come down. It could be us sweeping this low that we formed today and then riding the rest of the week back up into the range. But ideally, I'd love to see, best case scenario, the market do that. So again, as we go to let's go to NASDAQ really quickly. So NASDAQ is the same thing. If you guys remember, I haven't been trading NASDAQ. I have not traded NASDAQ this entire month because of the challenge that I'm currently on, right? I'm just focusing on currencies, right? I want to take this $10,000 account to about $20,000, hopefully before the end of October. Then I'll probably get back to NASDAQ, depending on current price action. But again, I just want to show people that it's possible to trade anything, and that's really the main point of this whole thing. So if you look at the monthly, again, we're about to close, on NASDAQ. We're about to close out this monthly candle, and really, if you look at things from like a monthly perspective, all we did was really just trade into this order block right here, respect it, and continue to go up. So what everybody saw as the world crashing was really just us getting liquidity back, right? And that happens a lot, right? It was the worst day that I think the market's ever seen, a single day, since like 1987, since like that big, Wolf of Wall Street stock crash that he talks about at the beginning of the movie. But we also had targets for last week as well. So I'm actually going to bring up QQQ. And so, actually, I'll leave micros up. So last week, what we wanted to see, if I have the right chart up, is that this was pretty much our primary target. We wanted to see, after getting faked out last week, where we kind of, thought that this potentially could have been a sell setup where the market would run back into this. And I said, again, that's going back 2 weeks. If the market traded back into this range and didn't respect this gap, then we most likely were going to continue up to the bullish, the high side. And obviously, that's what played out. But going to the daily time frame, our bullish objectives was this first high I had marked out. So if we zoom in, this high at 19,711 was our first high that we wanted to see the market really run for, right? The secondary high that we wanted to see things really run for was this volume imbalance. That's currently where we're sitting at. So the market really came up into here and respected this. And so ideally, we're still bullish, right? We're still looking for higher time frame objectives. Not only did we trade into this gap, take out these highs, we also traded back into this bullish fair value gap here. So there's a lot of overlapping liquidity markers here. And a lot of reasons as to why the market will should keep going up. If you go to the 4-hour time frame, we've really just been in a state of consolidation, right? We've just been trading back and forth. But ideally, I want to see the market really find a reason to continue to go higher. Now, again, keeping in mind that this is also the end of the month. So I don't think we're in the same exact situation as dollar, where we formed a high already, right? And we've started to trade off of this high, which is usually, how a monthly candle or any candle really forms, is we form for bullish, we take out the low, then we run to the high, then we trade off of the high. And so that's currently where we're sitting at. So ideally, I want to see the market continue to go higher, but with the caveat that it's the end of the month, right? So ideally, I want to see the market do something like this week. I'm looking for levels where we could really run to. And I'll be looking for 3 levels that I would love to potentially continue to buy off of. The first one is going to be a retest of the consequent encroachment of this daily fair value gap that's forming now, which is actually what we're getting right now. And I got to remember that the market is actually open right now. So this first level, respecting this level, which we're currently what we're getting, would have been the first level. So this here, and again, it's still very early in the day, so this might not hold or respect. The second level here is going to be obviously the low end of this fair value gap. And then I'm going to say this low to be safe, but either one of these lows are going to be the 3 areas that I'm going to look to really potentially buy at. This gap was left open, so we could also come back down here. So there's really like 3 or 4 areas that I'm looking to potentially buy in at on a bullish week. So again, you're looking for opportunities here at this 19,714 level, 19,682, 19,535, and then this fair value gap, re-entering that. So ideally, what I don't want to see happen is a break in market structure, though, which we're kind of, I would say, as long as this gap holds, as long as this low holds, we're probably not going to have that. So I don't want to see a break in market structure after we took out, a liquidity level. So ideally, I want to see the market continue to go higher. So respecting this low at the best would be like my cutoff for this trade. So this trade idea, this bullishness idea. Ideally, we still have this target to hit too, so would not be surprised if we came back up here. This will be kind of like the target for the week still, this CIVI, which will be that third target from last week that we didn't hit. So ideally bullishness, and I'll be looking really to see if we can take this to 20,173. So again, best case scenario here, I will feel strongly about bullishness once we take out this high, but ideally, I would love to buy in somewhere here to continue to go long. Let's go to Dow Jones very quickly. Let's mix it up. Let's do Dow Jones first. Dow Jones Industrial Average. Bow, 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 bow. So again, last week we wanted to see a level taken out. It was this high. I think that was our weekly target. Wanted to see the market run for this. We did. Kind of stuttered above. We did create an imbalance too, which is always a good sign to see that we create imbalances as we're taking out new levels. That kind of lets us know that the run might not be done. So what I'm going to do is I'm going to move this target up to, I'm actually going to say here, I'm actually going to say the all-time high. The reason for that is that we've created some relative equal highs here. And I've said this a bunch of times, but we know when we create relative equal highs below a liquidity level or the opposite, lows above a liquidity level, it's a really good opportunity that the market could continue to run up. So ideally, that's what I want to see this week. I would love to see the market form that fair value gap, with the close of Sunday, or well, technically it's Monday's candle, which is already opened, and then close, giving us an opportunity to get into longs and buy here, really to close out the week. Now, again, the caveat here, which I don't expect us to make new candles, make new highs towards the end of the month. Usually the last week of the month is, us trading back into the range. But if that's the case, if that's not the case, then, this is ideally what I want to see happen. I want to see this market respect this order block on the way to making some new all-time highs. So let's see what happens there. US 500, again, same thing. We took out this target last week, and that was kind of our goal for the week. A secondary target was really this high here. Which we ran to was this old CIBI, this old fair value gap here. So ideally for this week, I want to see the market really run for this high. This will be our target for this week. Again, the all-time high. So we're kind of back into a full bullishness kind of mode here. We've also seen a couple things happen where we closed above this. We currently are retesting this with the opening of this candle. So those are good signs, right? So ideally, I want to see the market do something like this, which we're already starting to do. Again, this is what happens when you trade, when you come into your analysis when the market opens up instead of later. So ideally, this is what I want to see. I want to see the market really run. Good sign that we're probably coming back up here are these 4-hour relative equal highs as well. So it's a good sign that we're coming back. So that's a good sign. So ideally, you want to see the market really run for those highs, both with the 4-hour highs and the all-time highs that we're looking to see. So ideally, that's what I would love to see. Worst case scenario is we already kind of traded through here and mitigated some of this. I would love to see kind of like a breaker setup where we take out these highs and then maybe potentially retest and come back on the way to those highs. So retesting the gap, which we've already done. Go to the hourly time frame, just to kind of get a better understanding of this. Yeah, we're filling all the gaps. So I wouldn't be surprised if we had an overnight run to these highs, or if we kind of consolidated here, maybe dip down into the gap one more time and then took out these highs. So it's funny though, when you understand the moves that the market can make, you can only really do three things, right? It can go up, it can go down, it can consolidate, and that's about it, right? So when you understand the kind of the play and you understand the kind of the structure of the market, it makes the game 10 times easier. So let's go to Euro futures really quickly. Euro futures is gonna be another one that I'm looking at. So if you look at the monthly candle, we've pretty much formed all-time highs. I mean, not all-time highs, but monthly highs. We're kind of trading very close to that monthly high candle. So knowing that we are okay, knowing that we are kind of close to that high again, a retracement off of the high could seem likely, this sometime this week, like definitely closing this week out. So keeping that in mind. But as far as targets go, if we go to the monthly, back to the monthly time frame again, we can see here that I had a level drawn out for the consequent encroachment of this wick. So again, consequent encroachment is something you want to watch out for, and that all that is really just making sure that you are the market respects 50% ranges, and so that is wicks, fair value gaps, all that stuff like that. So ideally, we just took out this consequent encroachment, which is also the high here. So ideally, what I want to see the market do is really continue to run for this high, but it really depends on how this monthly candle closes. I don't think we're gonna close above this high. I think there's a very good chance we could close back underneath this. So really we'll just be watching the market to see how we treat the end of this candle forming, which will be the end of the month, which I think it should end this week. I just need to know let me check my calendar. Yeah, so it should end on Friday. The end of this candle. So we'll see what happens. Ideally, though, I still want to maintain bullishness. The idea that we're going to continue to run higher. There's really no signs of bear. Like there's no reason why chart wise, as of yet, we should be looking for bearishness other than the idea that we are at the end of the month. But if we actually look at the chart action here, we're not really seeing anything bearish at all. We're very bullish. So last week, what I wanted to do was really run for this old high, and that's exactly what we got. So there was a couple levels. So Thursday, Wednesday, Tuesday, Monday. So I think this high was this high that I wanted to see the market run to. So if we zoom in at 1.120, that was the high that I think, yeah, that was the high that I called out that I said I want to see the market run to. And I ended up taking a trade, I think on Tuesday or Wednesday, and that was the 10% gain that we got on that $10,000 account. So which is again now 13,000. So coming into this week, we even had an extended run where we took out that high on, I think technically Wednesday, but we ran through it again on Friday. So we traded again. If I'm cleaning up my charts just to kind of make things a little bit clearer for you guys, I'm actually gonna kill these. What I would be paying very close attention to this week is how we use this fair value gap here, right? And so from a daily perspective, we are trading above consequent encroachment. We wicked off of the high of this gap, right? So ideally, I'm still bullish, and I'm looking for reasons to kind of confirm that bullishness. And if we add back again that all-time or that monthly high, right? If we add back that all-time high, that's what I'm going to be looking for. But as the next level, I just don't think we'll get it this week because of the end of the month. If we think about, again, just kind of so we have some reference for what's going on in the bigger time frames, that weekly consequent encroachment will be here as well. So I think there's a strong probability that we could close underneath that, but I'm still sticking to the bullish bias. And if we do close underneath that, it'll kind of change the way that I look at for next week. So ideally what I want to see happen is something like this. The market Retest consequent encroachment and then goes higher. Also, there's a few things here that I'm really paying attention to. This volume imbalance, I'm going to refer to this as like the new day opening. Well, technically the new week opening gap. So you might see the market reference this throughout the week, this level. So just to kind of have that mapped out. Then also, I do like the idea that we formed a fair value gap right above or right at the consequent encroachment level. It's usually good to see things line up when we start looking for bullish targets or bullish confirmation on things. It's good to see like these like liquidity markers kind of line up. And so what I mean by that is the idea that bullishness would still be, a valid idea if we stay over consequent encroachment is kind of strengthened by the idea of us having a fair value gap right there too. So the idea, so our bullish idea is good. So again, I wouldn't be surprised if Monday we consolidate, Tuesday we dip back into this gap, either at this level here or at this top end, meaning that we do something like this and then go higher. So these will be the two levels, the top end of this fair value gap at 1.208 and then 1.195 are the two levels that I'm looking really to potentially be buyers at, depending on what the market gives us. So that's cool. Let me look at Euro futures, GBP. As well. So again, on the monthly target last week, we wanted to see this high getting, well, let me go back. Last week, what we wanted to see is this high get taken out at 1.304. We did. We smashed that. That's awesome. Our next high, our next level that we're going to be looking for really is going to be, go down the daily time frame. It's going to be a small one. I'm just looking at this level here. And then if I go to the weekly time frame, if I go to the weekly time frame, again, that's a very prominent high, and just underneath, above that high, is also another volume imbalance right here. So ideally, this is going to be my targets. So again, taking into the fact that we are trading near the monthly high at the end of the month, we might not come back into that range, or we might not take out that high this week. We might trade back into the range. So with that in mind, I'm really looking to see how we react with whatever this future fair value gap will be on the weekly time frame. Obviously, the current week is the top end of that gap, so it'll let us know kind of where we should be looking for potentially next week if we don't take out this high, if we just have a very calm week. Another thing that's good is that we are still forming imbalances to the top side of this. So again, wherever Monday ends, right, is where obviously the upper end of this fair value gap will close. It could be here, could be down here some, depending on what we get. So I'll be looking to see kind of where that ends at the end of Monday, just to kind of have, a guide for Tuesday and the rest of the days. So the rest of the week. So again, forgetting the idea that the candle usually will end counter trend at the end of the month. I'm still going to stick with the idea of bullishness for now, but again, I won't be surprised if we do end on having a bearish counter trend week. But this is something that I want to see going into next week. I think we've closed very high above this old high, that it's very clear that this is not the ultimate draw on liquidity here. So we're going to probably keep running up, which is cool. So I love to see this. I love to see trending markets because it gives me an idea for potentially better bullish setups. When we take out an old high, you kind of want to sit there and just kind of be patient to see if the draw on liquidity, if this was the ultimate draw on liquidity, and we're going to reverse off of that and kind of break structure and keep going down. But since it's very clear and obvious that that's not the case, I will be looking to see that happen. Also, just kind of measuring price swings. Yeah, I don't think we're going to come back down there. Cool. Just kind of looking for an area of like premium and discount to see where we could potentially run to. So I think there's a lot of good things here. And what I will do actually is I will just close that out and make that gap a little bit smaller. Just to note, four-hour busy, right? So I have that there. Let's see. So 4-hour busy is there. And then just to kind of see us run into that gap going into Tuesday. And through the rest of the week is what I would like to see. So potentially Monday us drop back into this range, and then Tuesday really kind of continue to go higher. So ideally that's what I want to see for that. I will look at one more. Last week I looked at Euro AUD. I wasn't sure what happened. I didn't really look and see. Trying to remember what I called here. So I think I said we ran this old weekly high out and rejected from that. So I think I said I wanted to see bearishness. Yeah, I remember now. I said I ideally picture perfect scenario. I wanted to see the market really run for one of these highs. And it looks like starting out last week, we just kind of ran for this low and then traded back into this range here. And then let's go down to the hourly time frame. Yeah. We came back up and ran into that old high, that gap, and then just kind of rejected from there. Long term, going back to the daily time frame, I'm pretty still bearish on this, to be honest. So if you're trading that, kind of look for that. We are touching up against this gap, so I really would like to see us really run back into these 4-hour imbalances, what either this one or this one here. I think this would be like best case scenario. Because you have it overlapping with an order block as well. So ideally, I'd like to see the market kind of do something like this over the next few days and tank. Right, but we'll see again, end of month scenarios. So I've never traded Euro AUD. Maybe I need to start because that was kind of a good call out. But yeah, so that's all I have for you guys. Hopefully you enjoy it. If you guys have any questions at all, hit me in the Telegram chat. Feel free, you can always message me. And yeah, I mean, hopefully everybody has a good trading week. And actually, before we quit, I will actually look at Forex Factory really quickly to see if there's anything going on. So on Sunday, there's no news. Monday, there's nothing either. Tuesday, we have Consumer Price Index at 10 a.m. So that's something to note. Wednesday, nothing really. Thursday, we have unemployment claims and preliminary. So I wouldn't be surprised if and Friday we have CPI for Europe and then CPI for America. This is going to be an interesting week. I wouldn't be surprised if we didn't hit the reversal in this week until like Wednesday. I could definitely see us consolidating Monday. If I go back to the charts, I could definitely see us like consolidating Monday. And let's say, just to give you an example on the futures, or like the currencies, I guess the same rules will apply obviously for, if I pull a pound dollar, pound dollar, obviously the same thing will apply to the futures version of that. But I wouldn't be surprised if we consolidated Monday, dropped down Tuesday, and then traded the rest of the week, only because the market is going to want to align these things with major news events, and we have a lot of stuff coming on Tuesday and Thursday and Friday. So I think the back half of this week is going to be like particularly explosive or volatile. But yeah, I would not. I mean, it could play out, bullish, but I would see, like, I would expect the back half of the week to be very, very volatile, very, very, very fun. So if you guys have any questions at all, hit me in the chat, and then go from there. So thanks. Peace.